get some insights in the news shaping the markets, and for that, we welcome in Shana Sissel, founder and president at Bannery Capital Management. Thank you for being with us. So far, we've gotten some in the beginning of the banks. We'll get a slew more next week. What's your takeaway thus far?
I'm encouraged by the bank results thus far, showing exactly what the Fed had said, which is that the banking system is stable and that there's no issues with solvency. But I'm a little more interested in seeing what the smaller banks' results are going to be. The bigger banks obviously were a beneficiary of what happened with Silicon Valley Bank. They were the place where people really felt like they're too big to fail, and our deposits will be completely covered if we go to these larger banks that are considered really important to the economy. So for me, it'll be interesting to see what some of the smaller banks did. And I think that's another week or so away before we get some outlook on that.
All right, and good points. And so at this point now, I'm also thinking about the 10-year and how we are seeing yields moving higher. In fact, the 10-year bond yield's at a 2-week high. Market did turn negative after being higher early in the morning. Obviously, as rates creep higher, that spooks investors some.
It does spook investors. The Fed minutes earlier this week explicitly said that the Fed is expecting a recession. I think that the market is a bit spooked by that. We've never had a recession that didn't involve a substantial decline in corporate profits, so we should be expecting that. The other issue I think is worth noting is that we have inflation at 5.6% and the Fed funds rate at about 5%. We're still well above the Fed target of 2%. And then there's a lot of discussion of whether or not there will be a cut. I think it's really important to note that the Fed has never cut interest rates while inflation remains above the target Fed funds rate. So, we really need to see that kind of flip where the inflation rate is below the Fed funds rate before there's ever going to be a chance of a cut. But I think that the Fed has been pretty clear that inflation remains their main concern. Employment is showing a little bit of weakness, but not enough that I think would cause the Fed to really pause. And with this bank results, I think it's showing that the banking system has shored up, which I actually only think emboldens the Fed because, it's showing that they were able to resolve the issue after the Silicon Valley Bank scare.
Yeah, without a doubt. And you made the point of JP Morgan. I mean, that's been leading the way. That's up today 7-8%. We also have BlackRock and Citi doing well today. Another thing is consumer sentiment, which that improved, came in 63.5 for its preliminary April reading. That was above the expectations of 62. But the key is the inflation expectations. The one-year outlook for inflation expectations are on the rise. And that, too, could pressure the markets, right?
Yes, absolutely. Although I would say that I'm not sure that that's actually connected with reality. We're not, obviously, we've seen 9 straight months of declining inflation. The last time we saw that was back in the 1930s. So this is sort of unprecedented. I find it hard to believe that we would suddenly see inflation jump back up again. And if that's what consumers are expecting, I think that is unlikely to happen. So that's actually a favorable outcome if consumers are largely getting more positive, but expectations for inflation are rising. This is actually a good thing, not a bad thing, because I don't think we're going to see inflation rise going forward by any stretch.
And that's not what the Fed said either. I mean, in those minutes, they were talking about while inflation is hot, that it's pulling back, and that was really their expectations. In fact, that one-year inflation number on the negative side of things, the one-year rose to 4.6% in April from 3.6% in March. It's not 0.1%. That's a full percentage point. People are really... Are they just getting in tune with what we've been watching? I feel like they're late to the game. To have such a big jump. Let's just get to some of the stocks, too. I don't want to leave them out. So you have your first one, Southern Copper, SCCO. Tell me about this one.
So let's just look broadly. A couple of sectors we're really interested right now are energy and materials. The energy and materials sector as a component of the S&P is smaller in market cap than Apple. So there's some opportunity here. And one of the things I like to point out is if you look at these types of materials, industrials, these cyclicals, they're going to have slightly higher PEs. And that is actually completely normal with cyclical stocks. When they are at their trough earnings, they tend to have the highest PEs. It's completely counterintuitive. So when we look at something like Southern Copper, as we think about where we're going, what some of the key trends are, one of the big trends right now is EV. And EVs use substantially more copper, 3 times more copper in EVs than in traditional internal combustion engine vehicles. So there is a rising demand for copper. And as Southern Copper is one of the largest providers of copper in the world. It's trading at about 19 times. And so I think this is a very attractive play right now. I'm focusing on some of the bigger multinational players because we have a weakening dollar, so they will benefit. And this is a stock that I think kind of fits into all of those trends that we're looking at that could really benefit as we have increasing demand for copper.
You also have NOV in the energy space, actually energy materials, way to make energy happen for us. And the last one was Leidos. That's in the world of industrials. Tell us about NOV and Leidos.
So NOV, looking again, like I said, materials, industrials, and energy are kind of our key plays. So pick the stock, my favorite stock from each one. NOV, again, falls into that really high PE, but again, cyclical. So expect that sort of at the trough. And they're at about 49 times, but they have a super strong balance sheet and they have really strong earnings momentum. So leader in the space as we're looking at increasing demand for, oil and gas. And this is a stock that is very attractive from that perspective, a leader in their space. Again, one of the larger players, a multinational player, so taking advantage of those other key trends that I touched on. So NOV is definitely a name that we're paying close attention to. And Leidos, I talk about a lot. It is my favorite stock in the defense sector, focused on cybersecurity and lots of other types of securities. It's not a name people talk about very often, has a rapidly growing health division, really strong management team. Everybody knows Leidos, even if they don't realize it. If you've gone to the airport, they have all the TSA screening machines are Leidos machines. So they have major market dominance and again, real demand for what they're doing. And in a slowing growth environment, you tend to see rise in government spending. We're seeing record defense spending, and Leidos will benefit from that.
All right. Shana, great to see you. Thank you for all of that. Really appreciate it. Shana Sissel, Van Ryan Capital Management. Thanks for being on the show.